Hi there, Shingirai here again with another update on portfolio performance over the past week. On a relatively risk-off week, we saw 9 out of 10 of the Cbam portfolios outperform their respective benchmarks, with returns ranging from Cbam 1 returning minus 0.11% down to Cbam 5 V2 returning minus 0.81%. We did continue to see that slew of speculative trading on interest rate decisions coming from the three major central banks, i.e. being the US Fed, the European Central Bank and the Bank of England, and that would see trades beginning to weigh towards some sort of slowdown in the interest rate hiking cycle, and that would see interest rate sensitive assets such as the Hypnosis Investment Songs Trust, the MAN GLG High Yield Opportunities and the LNG Global Thematic being the top performers on the 1 week basis, all up more than 0.49% on a 1 week basis. We continue to see some worries and angst coming from regional banks, which would translate to our financials overweight positions through JP Morgan US equity income, and that would see it be a laggard in performance on a 1 week basis, with that position being unhedged down 3.56% and the hedged position being down 2.42% in a week where we also saw some weakness there for US dollar versus pound sterling. We also saw some headwinds for Fidelity US Index Trust, as the broader US market continued to be challenged by those positive reports coming from the job market, with the non-farm payroll data coming in positive and unemployment remaining lower than expectations, and also that really prompting bets again from the market around the sort of path that the interest rates would be taking as determined by the Federal Open Market Committee. Speaking on a quarter-to-date basis, 5 out of 10 of the Cbam portfolios outperformed their respective benchmarks, with returns again ranging from Cbam 2, 0.12% down to Cbam 5 V2, down about 70 basis points on a quarter-to-date basis. And as I mentioned earlier, we did see some interest rate sensitive assets really beginning to rally on the back of speculative bets from the market that interest rate hikes would be coming to sort of plateau, and that would see Hypnosis Investment Songs Trust up 8.4%, and then some merger and acquisition activity in the UK mid-cap space that we've highlighted over the past couple of weeks, and then some strong earnings coming out of Europe with some positive surprise also from that Aberdeen European smaller companies and the FTSE 250 UK mid-cap up more than 2.8% on the quarter-to-date basis. In terms of detractors from performance, we do continue to see some fatigue on the China trade here, as the market becomes somewhat impatient in terms of that China reopening story on the back of China reopening after prolonged periods of lockdowns related to COVID, and that would see Colombia Threadneedle China and Bailey Gifford down more than 8% on a quarter-to-date basis. And it didn't help very much that at the beginning of the week we began to see some weakness in Chinese imports down about 8%, and also some PPI data also indicating some weakness, lower than expectations as well, and that's really adding to the fuel that investors have been worried about that Chinese reopening growth story. Then finally, we did see some weakness there again for iShares Global Clean Energy, down about 8%, which is not surprising due to the correlation between the clean energy sort of asset space with Brent crude as well, also coming down more than 10% on the second half of the month of April. In terms of macroeconomic data, we did see 3 central bank interest rate hikes, all moving 25 basis points upwards, starting with the US Fed last week, followed closely by the European Central Bank, and then also seeing a similar decision coming out from the Bank of England today. And then we also got US inflation print coming in lower than expectations, and also US jobs data coming in higher than expectations. We'll be also looking forward to some GDP data coming out tomorrow, and more sort of jobs data from the US as well coming out tomorrow.